I'll be right back with you guys. Hey, Jim, how you doing? We're gonna get going. I have got to do one thing before we actually do that. I started this without having the. Hold on just a second. Recordings. Okay. Well, I think we are just basically set with what we have, and I have not uh, basically, I forgot to push one of the buttons. Okay. And my son hopefully can figure that out. So aloha, everybody. Prakash, how you doing? Hey, Jake. Hey, Jim. Let's jump into it. Hey, did you know that taking profits on strength is smart trading, but are you trading smart? Hey, let's uncover the secrets to securing your gains before they slip away by taking a look at this particular stock. We all recognize this is NVIDIA. NVIDIA has basically been on some tremendous runs and all that kind of stuff. However, is it time to take profits on NVIDIA? Well, let's take a look at the charts and maybe that can help us determine what's going on here. You know, today's spotlight chart is NVIDIA, and the prime example of why taking profits on strength isn't just an option, but it's a necessary for trading success. Let's dive deep into what's going on with NVIDIA. And, because I hear so many sad stories from traders who basically, and friends who says, yeah, I was up almost 20%, but now I'm down 20%. And then they always prefer, basically follow that up with, well, what do I do now? We see here with NVIDIA. So NVIDIA, what can we know about NVIDIA? Well, one, it went on one huge run here, went sideways and moved up. This is one of the reasons why you want to take a look at the individual charts to understand what's going on. Let's see if we can dissect this and help you go, oh yeah, maybe I should take some profits off the table. So let's back out of that. And that. So if you take a look, if you got into NVIDIA, let's say back at the beginning of 2023, well, it went on one heck of a run. It ran up over 200% in about 222 days, a little bit over 3/4 of a year. Then it went sideways. It went sideways for how long? 165 days. In other words, about 6 months. During this period, it was flipping back and forth about 20%. So if you were a day or a short-term trader, yeah, you could have made some profits. But if you were a long-time investor, your profits or your movement during that time was kind of dead in the water. So you weren't gaining anything. And then from that breakout there up to the new high has been another 100%. So in a little less than what from the time it began this move back here until we hit the high right there, that was 511 days, so a little bit over 1 year. Interesting. So what do you do now? Well, are we showing some weaknesses? And the answer to that question is yes, we are. As you can see on NVIDIA is breaking down below the 8-day moving average. And all of the momentum indicators are not only pointing down, but they have crossed to the downside. We saw a very nice negative divergence right there as it was going up to meet a new high. That does not bode well for NVIDIA continuing on the same pace that it's been on for the last almost 2.5+ years. What else can we take a look at? Well, over here on the weekly chart, look what's going on here. We have the momentum starting to shift. TSI is crossed down. The RSI has crossed down. Now, it hasn't broken below the positive 70 line yet. However, it does look like it's in a process of moving down. What kind of a candlestick do we have on NVDA? On NVDA, we have on the weekly basis right now. Get rid of that. As you see, last week we had first we had a shooting star that happened 4 weeks ago. Always look back to your left. The high of that shooting star, which is a bearish reversal signal, never has been voided. So that's still intact. We have basically rallied back up into the high, and now we're falling and failing. We could wind up with a bearish engulfing for the week. With the now, where's it going to go from here? I don't know. But even if it falls back down to the 50-day moving average, that's about a 12+% drop, or $114. And so the question you have to ask yourself to be a smart trader is, do I take out some profits there? So what is one of the profits that I would take out? I can say, hey, I'm going to sell half my position, and then from there, or a quarter position. The deal is, learn to be a winner by taking some profits off the table. So let's go ahead and jump back over to, have you ever felt like one of these guys? You're a deer in the headlights. And you get that chill, that you basically deer in the headlight feeling, watching a hefty profit turn into a loss. You're not alone. I've been there. That's my story. Matter of fact, I've done it so well that I've actually blown up 2 accounts because I was the deer in the headlights. And, I've been there, failing to capitalize on gains. That's, and that sucks. I mean, it really does. And it left me stuck in uncertainty, much like little Bambi here, going, oh no. Well, today I'm going to basically share my journey from hesitation to action, revealing the technical steps that transform my trading and can actually transform yours also. As we tackle the Magnificent 7 stock, a surprising leverage ETF, and our index analysis, you'll gain insight to avoid my past mistakes and trade with confidence. So let's kick off first with the indexes, and then we'll jump with the indexes. There we go. And we'll take a look at what's going on with them. So first index that's up is, of course, the spiders. Spiders. Okay, spiders on a daily chart. We are basically going back up to hit, kind of give us a little bit of a double top type action here. We really we had this one shooting star here on the spiders that has then been voided, and we've gone up to newer highs. It is very much a reasonable expectations to see this S&P reach this upper uptrend line, stop there, and then fall. Remember what's going on right now with the, the question I'm going to have is does today's index performance just reflect window dressing? We have to remember that this is the last day of the quarter, and institutions go in and they basically rebalance their own portfolio to make it match their prospectus, which means if they didn't have enough Tesla, they'll have to buy some Tesla. If they didn't have enough of, Apple, they'll have to buy some Apple to balance things out. That also can sometimes show up as selling on popular names because that particular name or stock, they were too heavily weighted in that. And that's what's going on there. If you've ever wondered, now you know what's going on here. So on the S&P, I'm not going to do anything with this. We are extended. It is basically the momentum on the weekly chart. The momentum on the daily chart is all pointed in the upside direction. Notice that on the longer term momentum on the weekly chart, and a daily chart, excuse me, even though we are making new highs, our momentum is actually falling off. So moving up, moving down, what's that going to translate to over the next few months? We'll see. We'll have to wait until the price action works its way out. So that's what we've got going with the spiders. I'm going to hit on the Russell real quick here. The Russell. This is pretty. You're going, yeah, Dennis, what's so pretty about it? Well, I've got a shooting star now on the Russell at a level of past support. Let's see where. I'm going to bop over here to the monthly chart. And as you can see, that high right there is not the ultimate high of the 244. It's actually just a little swing high right here. So while it is a monthly swing high, the strength of it, as far as holding back the prices, could be suspect. We have got a really great move to the upside on IWM. However, we may get a pullback. And where would the pullback go? Look for the pullback to come back into the 8-day moving average or the 8-week moving average. That's where I would expect a bounce on IWM. And of course, we would be shifting over to trade. If you're with a premium member, we would be shifting over to trade off of TNA on this particular one. And then last but not least, of course, are the Qs representing the NASDAQ. So NASDAQ, okay, NASDAQ, this is the first time in a long time that the NASDAQ hasn't looked as healthy as the Russell. The Russell is basically breaking out to new highs. And now the Russell, of course, you remember, it's catching up. So let's see what's going on here. We are breaking up and out. We are just kind of stalling here. Just kind of stalling. Note the TSI could break to the downside on the daily chart. And we've already broken below, as you can see over here on the weekly chart. We've done this little funky head and shoulders type pattern and broken below the plus 42 line on the TSI. Look, the RISI is also showing negative divergence. The market forecast, that green line though, is still holding up. It is just basically strong as can be. And so I would anticipate, I'm not going to be wanting to do anything to the downside until I get a close or a cross below the 8-week moving average. But that's kind of my line of demarcation there. You may be wondering about, what of these new things are on my chart. Okay, I've got an 8-period moving average with a 1.5 ATR Keltner. We'll get into that shortly as we get into some of the trading tech tips a little bit later in the session. So I get a close below the 8-week. Yeah, that's telling me that we're probably going to go down. I want to go back to here. That's the last time we had that close and everything broke down. This was not a very steep correction. It was a little bit, it was around 10%. So I would look for, if we do a correction up here, about the same thing, simply because it will mirror what's happened in the past. And that is awesome. So, okay. So if you ever wonder why, despite having all the right tools and information, making profitable trades can sometimes feel like an uphill battle. If you ever feels like an uphill battle, just raise your hand in the chat box and say, yeah, that's me, man. sometimes I just feel like, oh man, I make all this progress and then I get stuck and I fall back into bad habits. Well, let's take a look at a couple of different things. One is here's what the how we're doing with the autopilot trading. As you can see, we are now ahead of schedule. I did make a commitment to our premium members that I am basically trading this year for more than 40% for the year. And some of the great new things that were coming online that you got to know about. Okay. And he's going to really just probably say bad words to me. But if you like Discord, there's a new Discord channel that's coming. It will be first offered to premium members, but it is coming. And I just want to thank Jake and Jim Lee for putting this together. For Jim, especially Jim, he's doing just awesome work on pulling this together. Teaching me some new tricks about how Discord work. And let me tell you, if you're not a premium member now, you're going to want to be, because this is absolutely amazing what we're going to be able to do. We're going to be able to tell about audibles. And I don't want to get into that. We're not going to get into it right now. Sorry. Let's get back on track here. See how excited I get? And Prakash, soon. I have to talk to Jim. And so don't ask Jim when either, because but I know it's getting really, really, really close. So here's where we're going. And so I'm sitting up about 13% for the year so far. Very pleased with that. We're beating the S&P by 3%. So I'm going to dig out of this really quick and go back over to here. So the reason I'm doing this bonus session, if you will, of the autopilot trading of the Trade Your Way to Freedom is I'm trying to try out some new things. I'm trying to condense it down into a shorter time frame. And so I'm doing some experimenting. Anil will be back with us next Friday. But he was, I wanted to let him have the week off, no, seriously. He'll be back next week, but I wanted to try some new things. I just share it with you really quick. I think that while I was trying to show some of the pain points by developing characters through the storyline with autopilot trading, in doing so, I'm not sure it was resonating with everybody, but I want to, that's why I want to get back and talk about the struggles and pains that I had, because we're much alike. If I've had problems and troubles and pains trading, they probably have matched yours. And so, that's one of the things that why I want to, take this slightly different tact. Because ultimately, everything I do with autopilot trading membership and trading is to help you become a master trader. And so let's get into this section right here. Do you know why limiting beliefs were so painful and damaging to me? Well, let me tell you a bit about my own trading story. I'll show you how certain sneaky thoughts and beliefs can mess with your trading choices, causing those annoying problems we all want to avoid. It's like going on a journey from being trapped by these sticky thoughts to finally reaching, and I have finally reached a place where my mindset boosts my trading rather than, kind of almost like, I don't know if you've ever smoked cigarettes, but you ever watch somebody put out a cigarette and squish it out the flame? And my limiting beliefs was just like that. It would just basically and keep me from achieving what I can achieve, could achieve. So, You're probably asking, how do these limiting beliefs, mess up my trading? Well, let's go into a couple of them. First of all, the fear of missing out. You see everyone else you see everybody else making trades and feel like you have to jump in too. And even if it's not the best move, you're just going to, it's like that, the crowd's pulling you along. That's a limiting belief telling you that if I don't act now, I'll lose out, which can lead to one, hasty and impulsive decision. If anybody knows what I'm talking about, just, put a thumbs up in the, or an emoji. Put a crying emoji in the chat box, man. Let's keep this real. And then sometimes we get a few wins and start thinking, "Hey, man, I'm unbeatable. I am absolutely top-notch master trader." And this belief can make us ignore the risk and overplay our hands, leading to unexpected losses. What is this? It's overconfidence. And then a big one also, I believe, this is, I think, one of the biggest ones because it can mess up your mind, let me tell you. And it's recency bias. This is when you think what happened recently will happen again or keep happening. If a stock, is been going up, we assume it's just going to keep rising. And oftentimes, once it starts down, our recency says it has to go up. So what do? We hang on for dear life. And this bias can blind us to the bigger picture. And even though my wife tells me that, maybe this is what bothers, that has impacted me when I first started trading, believe it or not, if you're always looking for the perfect trade or think you can't make a mistake, your perfectionism can absolutely, slap the snot out of you when it comes to trading. So, these limiting beliefs can sneak up and push us into making bad trading decisions. I know for me, my end results were like getting my guts ripped out. And that's what it feels like when you basically blow up two accounts, but don't worry. We're going to tackle these, and here's a couple of ways you can tackle them. So part of the solution to FOMO is take a step back before you jump into a trade. Make sure you're following your rules. Set specific trading goals that your rules will do. Number 2 is basically keep a trade journal to reflect on both successes and unsuccessful trades. I will encourage you to take a harder look, especially if you've had several losing trades in a row. I encourage you to take a look at the successes you've had in the past. I know there's one particular trade that I always rely on to say, you know what, I'm a pretty darn good trader. And what it was many years ago. It was on the Thursday or Friday before Brandon and Sharon, Brandon's my son, got married, right? And I had some option trades on that I had just researched, and it was on MasterCard, right? It was on MasterCard. Well, I basically traded it the right way. MasterCard took off. I made about $7,000 on the trade. And so jokingly, I said after that, is MasterCard paid for my son's wedding. If you get that. So the cool thing about it is, though, remember your wins. Write your wins down in your journal. So, I tell you that story about, Brandon's wedding, all that kind of stuff. Just an example of when I reflect back on that, it helps me feel and act like the winning and master trader that I am. Let's see, what else? Tackle your recency bias, broaden your perspective. Again, that is where you take a look back at your wins, not just your losses. And lastly, focus on consistent performance over time, not perfection in just one trade. In trading, there is no perfection. Everything about trading is a compromise. So now that we've tackled, I hope that resonates with a lot of people. Now that we've tackled those tricky and sticky limiting beliefs, because they are. When I call it sticky, I do mean that, because what's a sticky belief? It's something that gets in your mind. It's like a cobweb of a spider that just, wraps you up and binds you from moving forward. And so we need to break loose. And sometimes you have to burn the dadgum spider web to make yourself, get out of the way. So what's next? How do you apply this newfound clarity to the real world of trading? Let's take a look at our stocks in the news for this week. We already, as we said, we already looked at NVDA. Let's take a look at Tesla. I want to make sure that I'm looking at the right ones. There we go. So I am not going to look at Tesla first. We are going to look first at, now that I have my script up, let's take a look at Google. This is a part of the Magnificent Seven, and I think it's one of the best of the Magnificent Seven. Do I buy it right here? Great question. It is getting back up into, see this zone over here? And this zone, I'll just draw this in here up here. That is in, now it's into a zone where things could break down. Notice that, this is a real cool thing to notice, the moves from this last week have closed the gap. The gap is now officially closed. And so I like Google, but I probably like it off of the 8-week moving average or the 8-day moving average. Just keep your eye on it because it is moving nicely. Worst case, down at the bottom of the Keltner channel is where I would look at wanting to get in on Google. Next, I'll just throw up really quick. Put Amazon high on your list. Did I write that in there? Yeah, Amazon. Because Amazon, slow mover, but it's respecting the heck out of the 8-day moving average and the 8-week moving average. It does drop down in between the 8 and the 34 occasionally. So keep your eye on Amazon. And then there's the redheaded stepchild that probably needs, and one of the things on Amazon and Google to remember, especially Google, is that shares of Google popped this, over the last few weeks, and partly it's because of Apple licensing their Alphabet. Sorry, guys. Well, fortunately, there we go. Hey, let's back up. The danger of going live, right? So there we go. Okay. What I was saying is, what I was covering early is right here. Price action, you can see right now, has moved all the way up into the upper region. There's a whole bunch of sellers up here because that was the past high. The other cool thing that has happened here is that we have closed that gap on Google. I would look at potentially buying Google, and this could be a long-term type of investment because it is also a slow mover, is either off the 8-week or watch the 8-day. And we may pull back down in between the 8 and the 34 as a potential buy point. Amazon also, similar type situation. It's respecting the heck out of the 8-week moving average. If it gets close to that, I would be a buyer of it. You can see my charts now, right? Oh, my son, Dennis Jr. is going to have a heck of a time editing this video. You're welcome, son. And so, just joking. He's a good guy. Tim, you can see my charts now, right? Okay, cool. So that's all we got for Amazon. And then I brought up, and then Amazon and Alphabet in particularly just signed a new deal with Apple. to license their Gemini AI system for iPhones. So that could drive the value of that up nicely. What else? What about Tesla? Tesla just keeps running over itself. You know, terrible pun, but that's exactly what it is. Look at what a beautiful and excuse me. Look at what a beautiful move back up into the 8-week moving average on Tesla. And look what it's doing. The sellers came in on cue, driving it down lower. I still like, if we break back down again, it's actually accelerated the downtrend on Tesla. And that's all I'm looking at right now, folks. I'm looking at just the technicals. The fundamentals on Tesla have been falling from the sky. They're really ugly. I think, now this is an opinion, please recognize it. I think that Tesla is looking a lot like the E stock. And that E stock, I'll type it in the chat and you'll know what I'm talking about. What do you think? Do you think Tesla is going to be another Enron? Let me know what you think. Drop a note, drop a comment in the chat box. If you're watching this as on a recording, let me know what you think there also. Hey, running over to the next. So that's it for Tesla. Tesla slipped 1.7% on Thursday. Its earnings fell by 40%. This is not the sign of a strong stock. And I don't know if Elon can pull it out. Next stock is a basically favorite. Nah, you don't think so? Okay. And so tea time. All right. Is that like tea time like at a golf course? If it is, I got you, man. Jared's hoping that Tesla does. Hope so. I have puts. So cryptocurrency is going nuts. You know that that's what's going on with that. I really like Mara, not from a fundamental standpoint, but I like Mara because I would like to see it get a close above the 8-week moving average, but it's coming back down here to bounce perhaps off of the 8-day moving average again. We did get a breakout, but it went right up into the Keltner channel and also the high over here, and then basically dropped from there. While that is a significant shooting star, I'm not reversing much of an uptrend. And as long as I'm operating within this Keltner channel, well, let's say between these past lows at about the $20.14 or $20 level, and where of this high up here, that's for the thing I like about Mara is if this does in fact is going to do a reversal. Well, one, that move right there was 23%. So if you were in on that move, hopefully you've, as we learned earlier, taken some profits off the table. And up here, if it runs all the way back up into past resistance of about the $31 level, that's about a 58% move. The last time it did that, we ran from here to here, about 74% in how many days? 8 days. So that's one of the reasons why I've got that on my list. The other stock, AMD. AMD was looking pretty good a little bit earlier. AMD is providing a lot of competition for guess who? NVDA. And so I don't know if NVDA is here, feeling AMD breathing down their neck or not, but AMD, it's holding that 50-day moving average. I would like to see a breakup, but the momentum on the daily charts, folks, take a look at this. It's all looking like it's getting ready to reverse and shift up. Again, I would like to see a close above the 8. And so, yeah, Rito, you're absolutely correct. Mara, so you got to be quick on the trigger. You have to, for us, we have our conditional orders in place to take advantage of those runs on Mara, not even trying to stay in it for the full ride. In other words, we want to do our 8 seconds and get off of that bucking bronco, you know? I grew up in Salinas, California, and of course, the Salinas, California is famous for the California rodeo, and so we used to watch those bucking Brahma bulls and all that kind of stuff. And so, yeah, you stay your 8 seconds and you go if you can stay on that long. So, last but not least, you need to watch this one. And I was liking this earlier. I may not like it right now, but SOXL. SOXL hanging right there on the 20-day, the 8-day moving average. The momentum has shifted up, and we are respecting and holding the trend line. So, if I were, wanting to get in this, I could, nibble about a little bit right there. Down below, if I broke the trend line, that's about a 10% loss. But if I just go down to the 34-day moving average, about 7.5%. And below that swing low there, about a little bit less than 6%. So that looks pretty good. And so, yeah, Rito, I think that the selling pressure that we're seeing on those today is, well, again, opinion is that they're probably rebalancing. So let's see here. So we talked about SOXL. Again, the semis are rallying. So with all these updates, you might be wondering how to make sense of it all. Well, that's where our next segment comes in. And the next segment, we're going to be talking about how to simplify your technical analysis. So have you ever felt overwhelmed by just the clutter on your charts, the noisy conflicting signals, or make sure that I am, okay, yeah, or just the sheer weight of too many decisions while trading? Aren't we all striving for that clarity and simplification or simplicity in our trading strategy? Well, let me take you back to a time in my own trading journey when my charts looked more like a bustling city map than the tools, to make informed decision. There was so much going on, so many indicators, lines, notes, and all this, just basically noise. I thought that more was better, but in reality, what I found is much like Leonardo da Vinci said, is that never be critical of simplicity, because there's sophistication in simplicity. So the pain, not just, so I had the pain of not just losing capital, but I lost confidence in myself because I couldn't figure out what the heck the darn thing was doing. So as you see, sure enough, part of the thing that I had to do to break out of that is just start doing some of these checkpoints. One, identify the core indicators, and then strip all the other junk off my chart. One of the things I always suggest to people, at least once a year, or once every 6 months, go to a naked chart that has nothing on it except price action. End of story. So cleaning up your charts means eliminating distractions that can lead to hesitation or confusion, enabling traders to focus on what's important and act without delay, which that brings us to remove the noise from my charts. Here's one that you may not. There you go, Tim. Tim's basically says, hey, print a copy of your cluttered chart and then hang it on the wall as a reminder, and then say, don't do this again. And so part of the things that, if you have your rules written down, you know what you're supposed to do in your mind, but can you see it on your chart? Can you see your rules on your charts? And I'll bet the majority of people would answer that as no. So understand and recognize what your rules look like on your chart will help dramatically. Review, journal, and reflection. Those are three elements that will help you basically identify. Yeah, ask yourself the question, what did I learn from this week of trading? Well, okay, what can I do better? How do I need to improve? What did I do really good? And if you've identified, hey, I took 15% profit on Mara this week, celebrate your win, guys. Celebrate your win because that's exactly what needs to be done. So oftentimes we misread the market, and that's where embrace your learning mindset. And when we misread the market sentiment of what's going on, means that we need to, well, embrace the learning mindset, but also focus on price action. By concentrating on price action, this cuts through the noise. It just cuts through the noise. What is that chart telling you? And then take action on that. With these 5 steps in hand, we're not just tidying up our trading space, but we're honing in on the essentials. Simplifying isn't about skimming the surface. It's about drilling down to what drives our trading engine. It's also about embracing a clear vision over a cluttered one. So, let's ditch those old worn out routines that have been holding us back and gear up to start trading in a kind of a brand new kind of way. And so let's, okay. That is, so does anybody relate with this? Like I said, that last little piece there should have said this. And I'm going to fix that right now. You don't mind. Well, I hope you don't mind. You might mind, but I'm going to. That last point should have been focused on price action, and then we'll pop that back up. So, what are your thoughts about that as a presentation? What are your on those 5 things to help clean up your clutter and reduce the noise? There we go. Okay. So as you're aware, I have not said anything about, well, I'm not going to say it either. Well, if you do want more trading tips like this, let me know, leave a comment down, and please, please subscribe and share our content from YouTube. It's really good. So, hey there, you know how we've been talking about trading a bit easier, making trading a little bit easier to handle, right? Well, I've got something that fits right into that. Over the last little bit, I have been getting into listening to audiobooks, and they're amazing. They really are amazing. And so I do have an audio book of my book, Trade Your Way to Freedom. And if you would like to get that, I encourage you just to basically check that out. It's on audio now, and everybody who says that they got the audio book said they're really loving it. I'll put the link down in the description. So with that, any questions you might want to ask? I apologize for some of the malfunctions, but I'll get you out so you can go take a look at your stocks or any trades that you're working on before the market closes. I hope you have. So trading is a journey and every step counts. Keep it simple, stay focused, and don't forget to tune in to those tips we've shared. You've got this, and you really do have this. Thanks for joining me on this ride to clearer, smarter trader. Until next time, aloha and God bless. Thanks, guys. You are awesome. Have a great, wonderful, wonderful Easter, and bless you all. See ya.